From the morning reading, spiders, diamonds pull back after new highs on Wednesday. One of 9 sectors moved higher on Thursday. XLV, XLI, and XLY were the strongest sectors, while XLU was the weakest sector. Oil futures fell 54 cents to close at 43.43. Breadth weakened as decliners led 1.74 to 1 on the New York Stock Exchange and 1.06 to 1 on the NASDAQ. The Dow Jones Industrial Average has enjoyed a spectacular 50 days. It has rallied more than 13% since its low almost 50 days ago, one of its best such rallies off of a low since 1897. Other times it managed to rally so well it tended to see some shorter-term weakness, except for the few times it rallied hard twice within a relatively short period of time. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:45 a.m. Central Time, and I'm recording this in preparation for the market day of April the 22nd, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let me go ahead and take a quick detour here. Obviously, we've had a little bit of a gap in the market preview videos in recent days, and I have to say that I'm really both a little surprised and also quite gratified in the number of inquiries that I had from followers of the YouTube video as to its absence. And I take it from that you are finding that this work is productive and helpful to your trading and investing activities. And it really means something. I greatly appreciate the inquiries. Everything is fine. But I had my hands full, to say the least. We are in the middle of one of those epic, life-changing moves. We are leaving Chicago and going to Montana. We're living the dream and doing something that is frankly made possible by this lifestyle of investing and trading, and being able to take some of the fruits of that labor and be able to move to an area where we think we're going to have a grand time in western Montana, in the Rocky Mountains of western Montana. Looking very much forward to getting ourselves situated out there. We took our a lot of our stuff out there in a first big trip, kind of getting ourselves settled up, and we'll finish that move in about 3 or 4 weeks. So there'll still be a little bit more of disruption to the flow as we move our operations from Chicago, where we've been for over 10 years, to the Western Rockies of Montana. But everything will eventually settle out, and we'll indeed be producing our regular Falcon Global market preview every single day, and producing the other products that we do for our members, and of course our trading room and other things like that will continue without any interruption. So just a quick note about that. I do appreciate the comments and inquiries as to what's happened, where's my market preview. It was frankly nice to get the messages, people asking about that. So let's go ahead and dive into the morning report. Enough about that. On the morning report, at the time of this cut, we had things were just barely above scratch. The S&P futures were up just under 5 points, about 0.25%. Russell futures also up just above scratch. NASDAQ was at scratch. Dow futures up just above scratch. Crude oil up about 0.5%. Euro down just below scratch. Bonds on scratch. And then gold down just below scratch. And overseas action, relatively quiet there in several of the markets. China just above scratch. Hong Kong down about 0.75%. Japan up a little over 1%. Germany down about 0.75%. And United Kingdom down a little more than 0.75%. In terms of macroeconomic reports for today in the United States, there isn't really anything to get excited about, just one little yellow flag report. So pretty quiet on that front. In terms of current volatility conditions, and much of the time that I was away, the market just continued to just crawl up, and we saw even the VIX get down below a 12.5 at one point. Here with the close yesterday, short-term VIX 13.18. Skew just above the warning threshold at a 127. IV percentiles, though, across all four indices, as you can see, are continuing to be exceptionally low, with an 11 on the S&P, an 11 on the Russell, a 13 on the NASDAQ, and a 6 on the Dow. And I got the standard deviation moves updated here, and you see that it's been relatively quiet in the last week, with very few standard deviation moves being put in. We did have a -1 standard deviation move put in on the Dow yesterday, so something to be aware of, and that's on a close-to-close basis. In terms of, let's go to the charts at this point, and as you can see, most of the time I was gone, the market was pulling up, though we did have something of a retracement start with yesterday's action. Question at this point is, again, much like we've had so much during this kind of historic run, and it's historic not just on the Dow. This is the S&P chart. We'll get to the Dow in just a minute. One of the morning authors mentioned the Dow as having one of the largest runs ever. During this time, you've had 1, 2, 3, 4, 5, 6, probably 6, 7, 8 potential bull flags. Basically all these have just set up as continuation patterns. Every little retracement. This one lasted longer than some, but ultimately, again, broke to the top side and did a continuation, and then another little retracement, and then continuation. Everything so far, and the expectation is that it should continue until proven otherwise, is that this has just been all retracements and a continuation in a series of bull flag and other similar continuation patterns. When you look at the Dow Futures, we see the same thing, and here's the talk about from this low up to this high, running some 13% in a period of about 50 days. Just frankly epic in that kind of performance in that short a period of time. We've also talked about the Russell, and recall that we mentioned earlier that my wife did a study looking at this period here. In this about 3 weeks, we had not a single retracement. There was 3 red candles. They're all just inside candles, nothing of a retracement. And that was the largest move in the 19-year history of the Russell with that kind of behavior. No retracements in the midst of that time frame and that size of a move. So, and of course, while it leveled off, it has continued to have a series of bull flags and higher highs and higher lows, and it's just continued. So all 4 of these indices are really on quite epic moves, and that brings both challenges and opportunities. Obviously, hopefully you started layering in positions. We did. We started layering in positions as we continued to gain confidence in this move and pick up more bullish delta exposure. At the same time, option income strategies and some of the others probably have been quite challenged during these last several weeks, because this has just been basically a one-sided move, having followed a one-sided move to the downside, where we've spent several weeks basically every single uptick was immediately met with down moves. So we fell about 13%, and then we rose about 13%, both in kind of one-sided price action. So the option income traders have probably been doing a lot of adjustments of late. In terms of some of the other markets, we see just how correlation is working. We have had an uptick in volatility here in recent days. We'll have to watch and see if that's signaling something more than just another bull flag pattern in the indices, whether we're going to start to see something, of a more significant retracement And it's hard to call for that when we've been so many times without it, but obviously the farther we go, the more the probabilities are that we will get some sort of significant retracement and and take some of the edge off. You got to exhale. You can't just inhale forever. The market has to exhale, and at the point that it exhales, the longer it takes between exhales, the more likely that exhale is to be rather explosive. So just kind of keep that in mind as we continue this very, very bullish action. In terms of bonds have been also signaling something of a continuation, as it were, of the equities moving up, as the rotation from bonds and other interest rate sensitive products, XLU, our utilities sector, you see the last couple days have really taken quite a hit, and pretty significant move from 49 and change down to 46, about 70 or so. Pretty significant percentage drop in those products in the last few days. So all the interest rate sensitive products have been really taking quite a move. Here's the REITs, quite a move in the last few days, as there's been some rotation away from the interest rate sensitive products towards rotation into other areas. Let's take a look at gold. And gold, while it did break out of this pattern and did make a higher high from this shorter term action and a higher low, it's really been quite choppy and quite a mess. Ultimately, you'd say that we continue to find rising support, and that's probably the most important thing at this point. But it also seems to be in a rather complex consolidation pattern, perhaps a triangle here, though a pretty sloppy one at this point, and then probably will break out to the long side. This is actually an IBD leaderboard contender right now, the GLD specifically, the ETF for physical gold, and this is probably going to break out to the long side. You might want to have this on your watch list and be considering something of a reduced exposure kind of entry, and because of the volatility of gold. At the same time, it's probably setting up, so it's something to kind of keep an eye on. Well, I think that's probably enough on the charts. Let's go ahead and go to our daily report. There's a number of things on our daily report we probably need to get into, including a couple changes in our mechanical timing signals. We've had, with yesterday's action, our IBD signal, that market timing signal went to uptrend under pressure, so that has deteriorated. Also of note, the accumulation distribution, though, still pretty sound at a B- and a B for the S&P. GMI index also deteriorated by a notch yesterday, dropping to a 5 out of 6, but still retains the buy signal that's been in place since March the 2nd. Decision point scoreboards, our third mechanical signal setup, has also experienced something of a minor deterioration, with the NASDAQ showing one of its signals going bearish with yesterday's action. So we do not have a stack of alignment between all three time frames, but it's nearly so. So this is a bearish signal in the context that, for the most part, you see everything else is bullish on the short term, everything is bullish on the intermediate term, and we have mixed signals on the long term of both bullish and bearish. So that tells us that overall we should read this as a market in transition in a very wide trading range. Remember, we have still not taken out those all-time highs of last Memorial Day week, nor have we, really taken out any significant lows. We've basically been playing between that 1800 area and the 2100 plus area for about some 16, 17 months now. So we continue to play in that transition zone, and oscillating from one side to another of that very large zone. You notice with the deterioration in the IBD mechanical signal, you also have a deterioration in the buy side opinion for your portfolio exposure. Position sizing now dropped down to a 50%. On the active trader volatility based system, that's still at 75 to 100%. Intermediate term market posture still, frankly, very strongly bullish and supported by a weak but improving bullish sentiment line. In fact, you notice all four of these are still up over 90. In fact, they're up over 94 as a minimum. So they're all very, very strongly bullish. And you've got to have the expectation that this is going to be bullish until proven otherwise. The strength of the trend has improved. And while this signal is up over 80, this is a strong bullish trend, strong strength to the trend. Now, hedge warning status, this was something of a shift that has happened with yesterday's price action. And there is an enormous amount of influence from the objective mechanical signals and so forth, but ultimately I do apply a judgment at coming up with the hedge warning status. And I went back and forth about leaving this as level 0 plus, which is caution, well, it's normal with some cautionary aspects, to going to a full out level 1. And I ended up going to level 1, and I'll tell you a little bit about why I did that. We've had some deterioration, and significant deterioration, with this signal here, as well as, most importantly, the IBD signal going to uptrend under pressure. Now, understand why that went to uptrend under pressure. It went to uptrend under pressure because we've had 5 distribution days in the last 30 on both the S&P and the NASDAQ. So, this is something of a significant warning, and I felt that it was probably best to err to the side of increasing the warning status of the hedge risk level to a level 1, and perhaps being a bit too conservative than it is to make a mistake about being too aggressive. And so anyhow, so I have elevated this to level 1. So do take note of that. We are starting to see perhaps some signs that a correction may be starting to set up. Now, charts right now are basically saying that this is just looking like another bull flag for the most part. So you've got to take this as just that, level 1. This is our first increased warning level. It is kind of check things out. Maybe if you're initiating a new position, you know, really clean setups, or perhaps just a bit more defensive. You notice that our opinions on the option income strategies, cover call strategies, and put selling still haven't changed any. So this is just the start of a process of increasing the hedge warning status should conditions start to deteriorate. We still have 1-to-2 ratio called for, and the cover call strategies of in the money, 1 in the money for every 2 out of the money strikes. So still relatively aggressive there. Also low beta versus high beta, also 1-to-2 there. And, you know, in put selling, certainly these are the kinds of conditions that you look for with a relatively strong market overall. To any kind of pullback is looked at as an opportunity to actually initiate new put selling opportunities. Strongly consider defined risk positions, and position size and the scale you are willing to own is always a very good idea. In terms of specific warnings, you see the volatility ratio warnings in that reversal zone, the distribution day count we mentioned. That skew has come up over the warning level and is now signaling about a 9% probability of a 2 standard deviation move in the next 30 days. But in other areas, you know, this is relatively still benign. All 5 of our key intermarket risk aversion indicators are still flagged as risk on and really aren't showing any signs of rolling over as yet. Sentiment indicators are all relatively benign. In terms of specific ETFs, mining, high yield bonds, Japan, oil producers, energy, and Spain are all up in that higher reversal zone effort. So take a look for the formation of reversal patterns. If you have any exposure in these areas, this is kind of your first warning for those. Other sentiment from our CNN Money, where they compile 7 different fear and greed indicators up into one composite score. That's up, you see, at a 74, so just about in that extreme quarter of that signal. And that's also often where we start to look for those potential reversal patterns. Remember, when sentiment gets high, that is not itself a signal. It is a heads up to look for reversal signs coming in. In terms of sector specific, we still have a broad range of both low beta, defensive type sectors, as well as higher beta that are in intermediate term bullish market postures. And I'll just scroll through this long list. You'll see very long list. So most of those are, certainly signaling strong, supportive, bullish conditions. In terms of our percent change for yesterday, you can see it was indeed a fairly negative day, and some of these down more than 2%. Utilities and telecom, those most defensive kind of interest rate kind of sensitive areas took it hardest. And in fact, you look here, utilities, consumer staples, telecom, the 3 perhaps most defensive sectors took a hit the hardest. So kind of interesting there, and maybe signaling some rotation going on from these more interest rate products, sensitive products, into some of the other areas. You'll also notice that the market postures in the short to intermediate to long, we had some deterioration with yesterday's action. We've got 3 sectors now that are neutral and 2 that are outright negative on the short to intermediate term. So things have started to deteriorate just a little bit. We'll have to see if this is just a bull flag continuation pattern or something more. And relative rotation graph, again, we see the improving with like IYT, transportation, XRT, IYZ. IYZ, of course, being the telecom, though has dipped just a little bit of late. These have been moving into that upper right quadrant, which is the land of love. And some of the things that had been heroes have been rotating out. And you see XLU, IYR, rotating out of that upper quadrant and doing some weakening at this time. So there is definitely some rotation going on in the marketplace. Okay, that's probably enough for today. We've gone a bit over our 20 minutes, which is where we like to be at max. I'm going to scroll through the slides. If you see something of interest in terms of special offerings and so forth, just hit the hyperlink and get your additional details. And we're going to go ahead and wrap this up for today. We won't try to catch up the whole world in one day back. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. You notice here at the bottom there's a hyperlink that goes to the full set of disclosures. So glad to be back at my normal trading desk, and let me know if you have any suggestions or other feedback. You can always send those to Stephen, S-T-E-P-H-E-N, at falconglobaltraders.com. We'll see you back here on Monday morning for the Falcon Global Market Preview. Good trading.